Hey traders, welcome back to the channel. Thank you guys for joining me today. Today I have a very special video today for you. I'm going to show you guys a bona fide strategy on how you guys can enter the market and how you guys can be very successful using the hedge fund levels and how we can use them in conjunction with other indicators for you guys who are fans of those. I'm going to show you how you can leverage the strength of a moving average and show you how we can combine that with support and resistance along with using divergent strategies as well. Alright guys, so we're going to combine all that today in today's video, and I'm going to show you how we can take advantage of a entry to go long and an entry to go short in the soybeans futures market. Alright guys, so let's get into the video and let me show you guys.
I'm coming in hot.
Alright guys, welcome back to the video. What I want to show you guys for what I have on the screen right now is currently my hedge fund level software. I want to point out to you guys, for anyone that's new to the channel, right now I have my hedge fund level software on the screen, which indicates these red and green arrows. If you're looking at this red arrow right here and you're looking at this green arrow right here, let me zoom that in so you can see that a little better. What that indicates is a volume flush of liquidity of big institutional buying and selling that's entering the market at that specific period of time, where it's based around the time and the volume with the amount of contracts that are being traded in the market for the soybeans market right now. Okay, so this red arrow right here indicates a big volume flush of selling to the downside came in, and this green arrow right here represents a big buying volume flush of liquidity that came into the market. Okay, don't get alarmed because you see this red one right here because you're like thinking, well, doesn't that mean this got pushed down? Not necessarily. What it means is, if you can see closely, if we zoom that in really close, let me show you guys. You see this wick that's right above this green candle right here, this big wick above it? If you look where that arrow is at, there's a wick right there. That just represents that there was a big push. Someone really tried to sell to push that candle down, but failed and got rejected. As you can see, price really pushed to the upside. It got really hardly rejected. All right, so that's all that represents, or what that means. So in case you guys are ever wondering, well, why is it printing here? Why is it printing there? That's what that means. But what you want to look for entries and how to use the hedge fund levels, now let's get to the good stuff, is when I look to take long entries, what you want to be looking for, falling reds. Okay, that means you're waiting to see if the price ever breaks through the falling red trend line and pushes to the upside. Now, if you want to take a short trade, you're looking for rising greens. You want to see if price ever breaks to the downside. So in this case, falling red, falling red, falling red. What you would do, you would connect this one to here. You would look, okay, does price ever break this line? It doesn't. So what you're doing next is you're drawing from the most previous one. You're taking from this one, and you're drawing that out, and you're extending to see, does price ever break through my trend line? And right here it does. That's all you're doing. That's all you're looking for. Now I want to show you guys how you can use this in conjunction with the moving average, with divergence, and with support and resistance. Okay, so right here on my screen, what you can see is I have a 200-day EMA moving average as this pink line. I have a 50-day SMA moving average as this orange line, and I have a 20-day moving average, simple moving average, as this yellow line, and a 15 EM day moving average as this blue line. Okay, so what I want to look for, and what I want to show you guys, how you can really use the hedge fund levels to really exploit the market, and how you can really use other little indicators such as divergence, support, and resistance, and moving averages in your favor, is doing it like this. All right, so you would just be ready for it. This is what traders do. This is what traders do. This is the day trading lifestyle. I'm showing you guys how it really goes down. This is what traders do. They sit here and they look for things all day. All these guys who are sitting there saying, oh, I do it in 15 minutes, that's all nonsense. What traders are really doing on the back end, they're doing their trading and they're doing their analysis from the days prior. Okay, you're looking to see what the market has been doing days prior, and you swing trade the market, and that's how you really make money. These guys are sitting here saying, oh, I do it every day, all day, in and out. If there are some, it's very few, but rarely. This is what majority of traders are doing, and I'm going to show you how we can really exploit the market using good strength indicators. Okay, so right here, we would just draw this out from here. This is our divergence that presents itself. On top of that, I'm going to show you guys next what the next thing I like to do. I like to look for my support zone. So there's my support zone. If we look to the left, you can see I had a nice support zone that presented itself right here to my left. This is where price came down. It's meeting this level and it's bouncing right off again. Okay. On top of that, I have an overextension on my moving average. My 15 and my 20 is very well overextended past my 50 right here. You can see that my 15 and my 20 breaks past my 50. Okay. On top of that, it broke my hedge fund level indicator, which is the most important thing on the screen. On top of next to that, my price breaks through the 200-day EMA, and we can held this thing, and I held this thing for a good trade all the way up to here. I got out because it started falling here, but I'm okay with that because I took a very good $2,000 trade on this one. Okay, so that's what I want you guys to look at. That's what you're looking for. Is price at a support zone? Is price overextended on the moving averages? Does price ever break our hedge fund levels? And do we have a divergence, presenting itself? So that's something you guys can use in conjunction with the hedge fund levels. You're basically just looking to capitalize on opportunities that show themselves as indicators with that. So those are the kind of indicators that I like. I'm going to show you guys a few more opportunities. So here we had a short presented itself. This is our green to our green. We connect that. Okay, price does break that, but let's see what we can be looking for prior to this presenting itself. Do we have divergence? Yes, we do. We have a very slight divergence move right here. Here it is going up. Price is going up. Here on the indicator, price is going down. Okay, so look at that. Price is already well above the 50-day moving average on the 20 and the 15. Does price ever come back through right here, right where price, where the 15 and 20 decide to cross? Price breaks the hedge fund level trend line. Okay. On top of that, if you want more confirmation and you don't want to totally just go for it, you can look to see, does price break our support level? Okay, check this out right here. This is our support level right here. Price came back and bounced. Price breaks the support level right here. And on top of that, it breaks through our 50. And now we're trickling down to the downside. And you could have swing traded this down to the downside. So on top of that, it even broke the 200. But that's a good, week and a half move right there. So that's how you guys can be using this to your advantage. I just really want you guys to understand the opportunities here in the market. You really need to find a strategy that works for you. I'm happy to guide people and show them how they can really use the hedge fund levels. If you guys like this video, remember to like and subscribe. Hit me up if you guys want a free demo. I'm happy to get it to you guys for a few days for free, literally for free. You guys can try for free. You can test drive it for like 2 or 3 days, whatever you guys want to do. Let me know what you guys are thinking. Remember to subscribe to my email list so you can get notifications for future content. I'm also going to show you guys how we can use these in conjunction with other indicators and other opportunities. So let me know what you guys are thinking. Shoot me some comments. Let me know if you guys want me to do a video on anything specific, or if you have any questions on how we can really use the hedge fund levels. And as well, if you guys have any suggestions, let me know what you guys are thinking. All right, guys? Happy trading.